The dollar index is losing ground since last Friday. Do you think it turns negative in the near term?
We've actually started to stabilize a little bit just in the last couple of days. So you're correct in that the dollar has pulled back a little bit in the last few weeks. But we're now at an area where if you look at indices like the DXY or the Bloomberg Dollar Index, which has a far lesser exposure to the euro, where we're down near support. So we're down near levels that have held over the last 6 months. My thinking is that we could have a little bit of a short-term rally here, and we've already started to see that the last 2 out of 3 days. So that's coinciding with emerging markets starting to stall out and turn back lower. So we're seeing weakness in some of the Chinese technology stocks, Alibaba, Tencent, Baidu, and we're starting to see the EM space in general weaken. So the Turkish lira has been falling and has fallen about 4% already today and is down about 12% for the week. And you're also seeing weakness in the Russian ruble, and we'll see what's happening with Argentina. That's always up in the air. But in general, emerging market currencies, it's tough to say that we're out of the woods, and that could be the biggest problem or maybe catalyst that could cause stocks to really start to fall is really an emerging market issue. But I still think that proves temporary, but over the next 3 to 5 weeks, I expect to see a little bit of dollar strength, and I expect the emerging markets to start to fall off pretty rapidly.
Amazon stock hit 2,000 per share for the first time just after market open Thursday. While Wall Street looks toward that milestone, from your report that your technical analyst is betting on a sharp pullback, is that right?
Well, first of all, let me say this. It's been very, very difficult to fade Amazon in the past over the years. The stock has literally gone straight up. It's been a very parabolic trend. However, there are a couple things that people like myself use to judge whether it's a good buy currently or not, and that's just using momentum indicators, one being relative strength index, or RSI. So RSI now on a weekly and a monthly basis is over 85, which means that the stock is very, very overbought. Historically, if you look back over the years, even since 2015, it's only been over 80 6 times, and 5 of those 6 times the stock fell between 10 and 20% within 3 months. So I don't see any evidence right now that it needs to turn back, but I'm just saying it's a very poor risk reward based on the extent that it's already moved up. So the stock has moved up about 10% in the last 8 or 9 trading days, and so back in the middle part of August, it was $100 lower. That was a much better time to consider buying it. Right now, when it's over 2,000, yeah, I would not touch it, and I don't believe that the Morgan Stanley analyst is going to be proven correct anytime soon. I think 2,500 is a long way off. I think it's going to be difficult to get to that target given the extent that the stock has already moved. So I made the case yesterday. I think it's going to pull back to 1,650 and think that happens before it goes to 2,500. So that's my call. I think that, the market overall seems like we're very close to a tipping point, and so I'm a little skeptical that Amazon can simply continue up day after day. So I don't like the stock here. I would favor stocks like Apple over Amazon.
So would you suggest do a pairs trade, short Amazon, long Apple?
I think that's a great trade. I've looked at it technically on the charts, and we've seen a lot of stabilization in that ratio lately. So, and a lot of that has come with just Apple starting to pick up speed on the upside with recent momentum. And so, to me, that looks like a very good long-short pairs trade. So I would be long Apple and be short Amazon here.
Then how do you see the value of Amazon now compared to China's Alibaba?
Well, so I think Alibaba is getting closer to a time when you want to really give that a look as a buy. I still think we're a little bit early, and based on the action just in the last couple of days, it means that people probably should wait until the middle part of September to late September. But I think that Alibaba is getting down to a very good level where it's going to be good to buy that versus buying Amazon. So I do favor buying both Tencent and buying Alibaba, but that's more of on a 2 to 3 month basis. And right now, I think that in the next 3 to 5 days or so, at least, that a lot of these Chinese tech stocks are still probably going to lead to the downside, which means that if you try to do the trade today, it's probably not going to work right away. Because a lot of the emerging market space is rolling over, and we're seeing weakness in Baidu and Alibaba and Tencent. But I do think that Tencent right near $37 to $39 a share, or Alibaba, if you can get it right down near 160. It's a pretty good value fundamentally from what I've heard from people that are fundamental analysts that look at it. And technically speaking, there's a lot of support on this pullback too. So I think it's getting to be a very interesting time when that space likely can start to work a little better.